Investing in gold is a fundamental aspect of portfolio diversification, offering a tangible asset that can act as a hedge against economic uncertainty. Gold has a long history of being a store of value, with its price often moving inversely to the stock market. Understanding the basics of investing in gold, such as how to buy and sell it, different investment options like physical gold or ETFs, and the factors influencing its price, is crucial for investors looking to explore this asset class. Gold is considered a reliable instrument for hedging against economic uncertainty due to its intrinsic value and limited supply. During times of market turbulence or geopolitical instability, investors often turn to gold as a safe haven asset to preserve capital and reduce risk in their portfolios. The historical performance of gold as a store of value, its ability to act as a diversifier in a portfolio, and its perceived stability make it an attractive investment option for those seeking to safeguard their wealth in the face of economic challenges. Investors have multiple avenues to invest in gold, each with its own advantages and considerations. Physical gold, such as gold bars or coins, provides direct ownership of the precious metal and is often seen as a tangible store of value. Gold ETFs offer a convenient way to gain exposure to gold prices without the need for physical storage, while gold mining stocks allow investors to participate in the potential profitability of gold mining companies. Understanding the differences between these investment options can help investors choose the approach that aligns best with their financial goals and risk tolerance. The price of gold is influenced by a variety of factors that reflect the dynamics of the global economy and financial markets. Market demand for gold, driven by factors such as jewelry consumption, industrial uses, and investment demand, plays a significant role in determining its price. Geopolitical events, such as conflicts or trade tensions, can create uncertainty and drive investors toward safe haven assets like gold. Inflation erodes the purchasing power of fiat currencies, leading investors to seek out inflation hedging assets like gold. Central bank policies, including interest rate decisions and quantitative easing measures, also impact gold prices by influencing the opportunity cost of holding gold. For beginners venturing into gold investment, understanding key strategies is crucial for success. When buying gold, research reputable dealers and consider the form of gold that best suits your investment goals. Selling gold requires knowledge of market conditions and being aware of fees associated with selling. Proper storage of physical gold is essential to protect your investment. Options range from home safes to secure vault facilities. By following these tips and staying informed about market trends, beginner gold investors can navigate the nuances of the gold market with confidence.